This is the third session of the series which we have started, and this series is known as Right to Rich. In first two sessions, we learned about how you can think about achieving your financial freedom. We also learned about what are different steps which you need to talk about. And in this particular video, we are going to learn how the entire framework of investing can help you in a step-by-step process and a nice systematic way with a very minimal time to achieve your financial freedom. So if all of you are ready for today's session, just type ready and let's get into the concepts that we are going to learn in today's session. So first of all, let's understand what are the reasons why investors fail in their investing journey. So the first reason is most of the investor, when they get started, okay, they don't know where to start. And even I have seen a lot of tenured investor also who spend a lot of time in the market, but still they are confused, what to do exactly step by step. So I'll give you a clarity around what all steps I follow in my entire framework so that you can also model that and you can adapt it to your investing strategy. The second thing in today's time and age, which is a very, very big problem, is information overload. How many of you think there is so much to learn and so much of information all around us? Yeah, all of us are bombarded with information on different social media channels, different books we have to read. There are so many, small pieces of content that come out and it's bombarded in front of us every single time. So it's very difficult for us how to separate wheat from chaff and what information to focus on and what information not to focus on. I'll tell you how I do it so that I filter out the exact information that I need. I don't sit in front of business news channels and keep consuming the information about different companies and businesses every single day. Third is not having money to learn or invest. A lot of time many people are struggling to get that basic money to learn and invest. So I'll tell you how you can get started and what should be your approach around it. And the fourth thing, which is implementation, right? So a half-cooked knowledge or learning the concept but not knowing how to implement step by step, it's again a dangerous thing. A lot of people see some random strategy on YouTube and then they are not sure how to implement that. And I'll tell you how you can implement the entire framework. And fifth, I've seen a lot of investors who just get started in their investing journey. They want to get rich quick, fast money lure, and they get into intraday trading and F&O and start taking leverage, which is very dangerous and you should not be doing it. How to avoid all these things by having a long-term approach and having a systematic process in place. So this is what we are going to cover, and I'm sure once you go through all these points which we have discussed in the framework, it will be a fail-proof system for all of you. Okay, so are you all ready? Just type ready and let's go into this fail-proof system. Keep taking notes. My throat is slightly low today, so pardon me, but I'll make sure that you will get the best value out of this particular video. Let's get started. All right, so let's get started in terms of what is the goal we all have as an investor, right? So if you are just doing intraday and everything, it's a totally different game, lot of leverage involved. But if you think about the overall thing, like what should be our mindset when we are investing for the long period of time? So our goal should be to beat benchmark returns by at least 10%. Okay, so on an average, Nifty has done around 15% CAGR for a long period of time. Our aim should be, as a full-time investor, or even if you are doing part-time or along with your job or business, with which you can do this once you understand the framework, the aim should be to beat index return by 10%. That means approximately 25% minimum compounding over a long period of time. Okay, so 25% CAGR is what our focus should be. Now, why that focus should be? Okay, why that minimum 25% focus should be there for all of us, I'll tell you. So the aim is, if you are able to beat index return by 10%, what it translates to is you will double your capital every 3 years. Now this might look okay, it is decent, but what it means in long term. So if you have heard my podcast, which I did sometime back on money control also, it had a punchline of Mr. Ramesh Damani, whose famous quote was that you can do 30 years, you can do 10 lakh, 200 crores. Now it might seem a very big number, but that's possible, right? So if you think about compounding 2x every 3 years, say for example you put in 100 rupees, that has become 200 rupees on the third year. Then that 200 rupees will become 400 rupees in the 6th year, and that 400 rupees will become 800 rupees in the 9th year, and approximately it will become 1000 rupees in the 10th year, 1000 or slightly more. So basically what it means is you can do 10x in 10 years, right? So if you have a portfolio of 1 crore right now, it can become 10 crore in 10 years just by in a disciplined way doing minimum 25% compounding every single year. Now if you can do more, it's even better. Some of my students are even doing better. In fact, I interviewed one of a senior citizen today, 69 years old, who just started his journey inside my community. His name is Ram Prasad, and I'll also be sharing his video probably tomorrow or day after, so that you can learn how he did it. So last 1 year he started his journey from scratch, and he was able to beat Nifty index return by 10%, right? Which many fund managers also struggle. So what it comes down to is you need to have a framework if you want to achieve it. You cannot do it randomly, because then 1 year it will happen, the second year you might fall down drastically, and then again to reach that same level itself might be too difficult. Okay, so that is where you need to build a long-term mega compounding strategy. Is it clear? So that is the first step you should do. Have a goal and have a strategy in place. Do you want to know how you can build a strategy around it? Yeah, just type yes if you want to know it. And I've basically, the aim should be to accelerate your financial freedom journey, right? And only when you have a goal or a plan or a strategy around it, only then it will happen. If you don't have a strategy around it, why you need to do what you need to do, it will not happen. Okay, so let's come into the portfolio strategy. So this I'm sharing you brief journey right now, but if you want to go deep dive, you can later on bookmark this video, which is called Way to Outperform Nifty Returns, where I have specifically gone deep dive into this strategy. But I'll just give you overview right now so that the dots are connected. Later on, if you feel you want to go deep dive and understand, there is a supporting video around it. Okay, so let's go into the strategy, how to go about this entire thing. So what I do personally is a two-part strategy. One is core portfolio. The aim of the core portfolio is long-term compounding along with capital protection. Now, how I do it? The way to do this is you start from fundamental analysis. You identify and screen companies which are around at least 15 to 25% kind of compounding their earnings. Now, if you watch the video which I created on core portfolio principles on my YouTube channel, I covered that there are two parts of investing return. The first part is your earnings growth, right? So as your earnings keeps growing, your share price will also grow. The second part is price to earnings multiple, and re-rating of that multiple will also give a kick to your returns. Now, most of the time the PE re-rating for known company, which is already known as a compounding company, it's limited. Over a long period of time, the earnings growth engine will create wealth for this particular segment of the companies. And that is where the aim for this particular portfolio is to find compounders for a long period of time. So how I do this is a detailed screening process, which will be out of the scope right now. But I'll show you the Excel which I use and how I go about it, right? So this is the Excel I use, and then I have different formula feeded in. So I'll just put my screen slightly towards the left so that I can show you how I identify the compounding, right? So if you see on the right side, there are like growth trend analysis of 9 years, you have for 5 years, you have for 3 years, and that is where it gets interesting. So I see what is the profit compounding for 9 years, whether it is 15-20%, whether the sales compounding is happening, and I also look at various ratio analysis. Okay, so whatever I want to see, basically it's there in one screen, and this happens after I run the first check of screen. So I have a checklist which I use for core portfolio compounding. Then there is a different screen which we run, and then once we run the screen, we go through the template and see whether everything is on track. Okay, so this is where we look at income statement, we look at balance sheet, we look at ratio analysis, we look at DuPont analysis, and take a final call that okay, broadly the compounding and the earnings growth is happening. Okay, now this is just the past mirror. We need to also see what are the earnings growth trigger. And while I'm speaking, you might feel it is like so much to learn and so much to do. But once you streamline this entire process, you can even do this like in a 2-hour or 3-hour over a weekend. Okay, so make sure it's just about practice and having that clarity in your mind, and that is what I'm trying to give you, that you should have clarity of what exactly needs to be done. If so far, if you all of you are with me, just type with you in the comment box. So this is where I aim for at least 5 to 10% outperformance, right? So if Nifty has performed say 15%, your core portfolio should ideally perform at least 20%. Even if it doesn't perform 25%, that's okay, because that is where the satellite portfolio will take care of that. Now, satellite portfolio is basically focused in, finding short-term high growth triggers. So there might be sectors which trend for like 2 years and then again come down, like cyclical sector, like some sectors where suddenly some tailwinds are starting. Like recently, defense sector, you have seen massive tailwinds. And I created a video like 3 months back. Some of the companies which I identified, almost they have gone 2x also. Like Mazgaon Dog, we identify, say Cochin Shipyard, we identify. A lot of them have gone almost like 2x in no time. So that kind of fast growth you might get at your portfolio if you are able to identify a sector correctly and then spot a stock over there. Right, so basically sector tailwinds and earnings trigger in a short term. It can go on for long term, and very well your satellite stock can also become a core portfolio stock ultimately. But this is more like a short term experimentation, whether it is really like an emerging winner or not. Another thing which I do is a lot of special situation come in, like demerger is there, or buyback is there, or delisting is there, open offer is there. You can again play those special situation within this entire portfolio construct. Okay, so 70% is generally like core, which is a super long term. And a lot of people ask, say me, that if it is long term, why do you have an entry and exit strategy? Because I don't want to compromise on my compounding, right? So if it grows, compounds for 15 years, I'm holding it for 15 years. But you never know, like after 2 years, the growth falters, the company is not doing so well, you need to exit it, right? So you basically keep on riding and sitting on that position until it compounds. If the compounding stops, because your underlying portfolio will only grow if your company grows, your exit should also trigger. Now, if you are understanding everything what we discussed so far, just type clear in the comment box if you have understood so far what it means. Okay, so now we have understood the goal, we have understood the process around how to create that strategy. Now the next thing which we will learn is the selection process, right? So how to select the stocks in the core and satellite portfolio. So the first thing what I do is I do like research around the screening part, then I use the Excel and try to see whether the compounding is in place and everything. And that is where you can even use this Excel and this video. There is a detailed video on how to use this Excel. So you can go and check this out. It's called Fundamental Analysis of Stocks Using Excel Screener. And if you want to download the Excel template, this is the link. Okay, so that is how you first go with the selection process, and I'll go deep dive in terms of what all things I do in terms of selection. Okay, so selection, there are two parts. Core is a stringent filtration. I use a formula called machine formula. I look specifically for sectoral mega trends. Okay, so I want mega trends to actually help me navigate this entire thing. So it's very, very clear, sectoral mega trends with my proprietary machine formula, and I look for advancing stage company, which I call stage 2 company. So there is an entire process called stage analysis, again out of the scope right now. I cover that into my hackathon, which is for my advanced paid members inside my community, but that is what I do. Like, I find companies which are in stage 2 with a stringent criteria, and for satellite it is more about emerging winners. So you find sector tailwinds, you look for price volume action where suddenly there is a spurt and there is a trigger that potentially the earnings are going to increase. You do your fundamental research, try to find those earnings trigger, and then keep riding it. Okay, and I use a lot of powerful chart patterns here, like VCP, base breakouts, rectangular breakouts, and a lot of people think that technical analysis is not useful for investing. It is actually very, very useful if you know how to use it. The problem is most people who comment about it, they don't know themselves what exactly technical analysis is, right? So that is where if you use right kind of signals to alert you, and then kind of do your fundamental research to find earnings growth trigger, you can actually find your winners in a much early stages. Okay, so that is where we use relative strength, and again it is on stage 2. So that is where you get a super powerful growth trajectory if you are riding any company in stage 2. So this is the brief process which I do in terms of selection of core and satellite portfolio companies. The next and very, very important aspect is allocation. A lot of people, they buy right companies, they might make like 5x, 10x. If you ask them what was the allocation of that company, they will say 1%. And what if that 1% even become 10x? You just made 10% portfolio returns. But what if you have a satellite portfolio company which ran in your favor, you kept on allocating your position, it became say 5%, and it just became 2x, still you make 10% at a portfolio level with just one position. So even if you find 2-3 such companies in your satellite portfolio itself in a year, it can generate like at least 15-20% of alpha on your entire portfolio. Then your core portfolio engine is just any which way is working for you, right? So the point is you need to allocate more to your winners, the companies which are working in your favor. The earnings are continuously increasing, the results are coming better and better, and the fundamentals is getting stronger and stronger. That is also supported by price. So that is where you ride your winners, and you need to cut your losers also. Okay, and to cut my losers, what I simply do is I start with a small tracking position, a small allocation. So if I'm wrong, if my thesis is wrong, it will take me out with a very small loss. And if I'm right, I'll ride it with a much bigger allocation. Okay, so allocation is a much powerful game, a stronger game, which all of you should play. So in allocation for core portfolio, I choose only 5 mega compounding sectors. Okay, and if you want to know which all 5 sectors currently I'm using into my core portfolio, you can go to this video, top 5 sectors to watch for next 5 years. This is where I've chosen some of the companies which are in mega trend and they can compound for a long period of time. And further, we filter them by 3 to 4 stocks in each sector. So 5 sectors, 3 to 4 stocks, and 15 to 20% allocation in each of these sectors. So that will total form like 70%. If you divide it by 5, it will be approximately 14 companies. So 14 companies in your core portfolio, 14 to 15, 4 to 5 in your satellite portfolio. Maximum in core, you can go up to 20. So 15 to 25 is your sweet spot where you achieve your diversification benefits. Okay, so that is how you do your allocation in your core portfolio. Then comes your satellite portfolio, right? So here we start with the tracking position. As I said, if we are wrong, we need to get out very quickly with a very small loss. If we are right, we want to study the fundamentals, understand, build conviction, and then scale up the position. Only when you ride your winners with a meaningful position, your risk reward will ultimately reflect in your portfolio returns. If you are riding your winners with a very small percentage, if you are not cutting down your losers and averaging down, then your losers will have a major portion in your portfolio. Your winners will have much lesser portion in your portfolio. Okay, so that is where it is very important to understand that math and follow that. So that is your core and satellite. Once you have allocated, then comes the review process. Okay, now although it might look like a very big process and tedious approach, but it's actually not. Okay, it's like doable. Even if you spend like 2 hours every weekend, that's pretty much possible. Then comes your review. So for review, first I have alerting mechanism, right? And recently there is a tool called Tijori Finance. They have actually made a powerful alerting mechanism, right? And objective is to keep everything simple, like have very very objective framework, not having like too much complexity in the things. What to do exactly should be known to us. So I'll show you how in Tijori you can go and do all these things. So let me come to this particular website. So here there is a alerts thing, right? So if you have put in any alert, like if I want to select say new alert, create new alert, I want to say company name, say I want to say Tata LXC. Okay, if Tata LXC, I will say alert name, say my IT alert. Okay, and I can say like if RSI is greater than say 55, then you create an alert, because I want to know whether it has started coming into a positive momentum zone or not. And it'll say status is on. So whenever this trigger happens, I'll get an alert. So this is how I make my life peaceful. Okay, if you understood, this is how the way of peaceful investing is. Just type PI, peaceful investing, in the comment box. Okay, yeah, I'll Faizan is asking a question. I recently actually made like almost 2x in Mazgaon Dock. I'll tell you how I allocated, and I have again a framework around it. So what I've done is I've built system around all the things which I do in my investing journey. So I'll share it with you. Okay, so for example, in allocation system, I use buy and sell allocation system. So say if it was say Cochin Shipyard or Mazgaon Dock, almost both became 2x. And I'll go to the daily chart. I have a inbuilt, this. I'll just share the screen and share it with you. So this is what I have built over here. Okay, so this is my own strategy which I've built in terms of entry and exit. This is where I made an entry. Okay, I'll just keep it like this. So this is where I made entry. Why? Because the same thing, as I discussed, I look at price volume action, I look at sector tailwinds. If you want to see what sector tailwinds I looked at and how I analyze this fundamentally, you can go and watch my defense sector video also. Let me see if I can find it somewhere over here. Okay, so you just go and check this particular video. Okay, defense sector, Vivek Mashrani. If you search with it on my YouTube channel, I shared why the price volume action is coming up, then what are the fundamental triggers, what is the PLI scheme, how to identify the order book, everything I have covered. Like, so entire process for finding earnings growth trigger, I've covered that. Within half an hour you can do it. Okay, and I've done it in front of all of you so that you know that it is not that difficult as it looks. Okay, it's doable and all of you can do it. So this is where you start, and all these green bars which you see, that is my system which tells me you don't need to exit. Only when it becomes red like this, if you see in the background there is so many red color, only then I need to exit. So basically my allocation started giving me signal that you need to keep increasing it, and I keep doing averaging up, right? So each new 52-week high, so all these flags are new 52 weeks highs, and on each of these flag I keep on adding the position. So I might have started from 0.5% here, then I would have gone to say 1%, then 2%, then 3%, then 4%, and probably by somewhere here I might be almost like 5%. Okay, just giving an example, but I don't add on VIX. I have some other few small minor criteria, but basically it is averaging up. So what if I got triggered here? I will lose with very small capital, right? What if I got exited here? I'll still lose with very small capital. If at all I make a loss, but I make sure that when I win with very, very big capital to back it behind them, right? So this is how it's still ongoing position. Okay, so just as a disclaimer, just because somebody asked as a question, I'm covering that, but it is a live position as I speak. I'm still holding it. I'm still on 2x as of now, and until this is not giving me exit signal, I'm not going to exit at least. Okay, so that is how the allocation process is there. If you found this mind blowing, just type MB in the comment box. Okay. So Power Mac also same thing happened. Okay. So Power Mac, I'll show where it actually triggered my exit system. And that also I shared real time just before even the exit triggered. I told this is how the process is. Now, can you see how Power Mac I was able to ride as well as exit at the right time? And by the way, if my re-entry triggers, I can always re-enter. So it's not like I've exited one time, I'll not enter again. So if you see here, almost like from 100,055 I entered, and my exit got triggered here somewhere. Okay, 1,800 or somewhere where you can see Z. And after that, almost it is not giving me any entry signal. So I'm just sitting quiet and chilling out. And that's the beauty about having a system in place. And this is how it gives you peaceful mind also, that, okay, you have a strategy in place. Worst case, you will give back some profit, but you will take home the entire profit which you have earned over here. Okay. So if this is super clear, just type super clear in the comment box. Yeah. So this is how you basically, can play both the things along with fundamentals. Of course, you need to know the fundamentals, but these kind of strategies, when you have a mechanism to enter and exit, can help you long way, because your mind is decluttered. You don't need to have a lot of permutation combination ke ab kya karenge, stock upar jayega, niche jayega. That is immaterial, because now you know exactly what to do, when to do with your system in place. Okay. So that is where, I've formed all these process. Then next one, what I do is for core portfolio particularly is information tracking system. Okay. So what I do in information tracking system, I want to see when I want to attend a con call. I want to know when I want to watch a result of a particular company. I want to know different news which is coming out for that company. Now, most people, what they do reverse thing. Like they sit in front of TV, they sit and watch each and every news on Economic Times, Money Control, or on Business News Channel, whatever is coming. And then they get confused. That lena kya hai, ab kya karna hai, and they get panicked that, okay, now somebody is selling sell, somebody is saying buy, what to do now? Because they don't have system, and they are doing exactly opposite thing of what is required. So what I do in my journey is I first create my, say, watch list. Okay. So say, for example, recently I was tracking railway stocks. So I have created a railway watch list. Okay. Now, once I've created a railway watch list, I'll just go to this tool and I'll go to the timeline and I'll just select, say, railway as a company's list. So now all the information which I'm getting is only particular to those company which I have chosen in the railway watch list. Okay. And then I click on, whatever kind of news I want. If I want news on credit rating, I just click on that. I want insider trading data, I just click on it. I want price change, I click on it. If I want revenue mix, I click on it. And on the left side, I'll just move my video on the left. There is also, the dates of the results which are going to come, so that I can track my results effectively. I know when exactly the con call is happening. I click on this link and it will take me to the proper link on the BSE website where the con call details are posted. So this saves me a lot of time, even like 5 minutes a day. If I am able to scroll through this entire list, it takes me a long way to save my time and get my mind decluttered. If you found this strategy powerful, just type powerful in the comment box. So the idea is, as an investor, you need to keep your mind very, very decluttered. And I'll also share some of the productivity hacks in this video itself. But this is how you make your mind super decluttered and still get great results, because you are focusing on things that are mattering to you. You are not like distracted across all the information flows. Okay. So let's go deeper and I'll tell you what next you need to do. So once you have built your information tracking system, you build a watch list tracking system. Okay. So that can be done in your trading view. So like in the left side, if you see, I've created a watch list tracking system. So if I want to see like quickly what my companies are doing and how the charts are looking and whether the strength is there, I just put a list of all my core portfolio companies here and I can just keep on scrolling them. It will take less than 5 minutes to scroll all my companies, but I know exactly, whether it is on track or not. So I look at strength, I look at, whether there is any breakdown that is happening after the results, or there is any earnings deterioration that is also being reflected by the patterns and price volume action. So I basically combine the power of technical analysis and fundamental analysis, so that it's foolproof. There is no stone unturned, because it's our hard earned money. Okay, so that is where I build a watch list tracking system. Then I build a risk management system, which I showed you, right? My Shaktiman is a risk management system where I have a clear defined entry criteria, I have defined averaging up criteria, and I have exit criteria, and I know exactly what is my risk reward going to be, because I have my position sizing mechanism in place. So if I lose, how much percentage I will lose, I'll exactly know that at the starting of my position. And when I exit, actually I know how much I'll give back to the market. Okay, so I don't give back like more than 10 to 15% in satellite position, and I don't give back more than like 30 to 35% on my core portfolio position. That also with position sizing. So if you are wrong initially, even if you lose like 5%, 10%, it is with a very, very micro position size. It's not like you lose your pants and shirt. But even if you are right, and if you have made like already 2-3x, then if you give 10% on an even bigger size, it doesn't matter, right? So if you have made 5x, you will make 4.5x. That's still okay. Okay, you can't time the market, you cannot identify a top, you will not be able to identify exact bottom. Okay, you will always be, after the top is formed, you will give back some capital. After the bottom is formed, you can enter only after some time. Okay, so that is totally fine as far as you are able to ride the trend in between. Okay, then we have a risk aggregation mechanism, and here also I've created a simple template. Okay, this template is available to all my gold members inside the community, and this is where we basically monitor each and every position by sector, by market cap, by distribution, by geography, whatever criteria you want to put. You can actually put your criteria, and you can also have thresholds, whether my particular sector has gone above a particular percentage. So this way you can manage your risk aggregation. Think about like your entire 100% portfolio is in chemical stock, and suddenly there is a very bad news that comes in a chemical sector. All your stocks are down 20%. So your portfolio will bleed like anything. Okay, so that is where you need to have your sector allocation caps. You need to have your market cap allocation caps. You need to have your geography related exposure as a cap. And all these things is done with a simple Excel without any much disturbance. And every quarter, once you just need to monitor it. You don't need to do it every day. Once in a quarter, you review it, and that is all it takes to streamline your process. Okay, so that is on the risk aggregation mechanism. And then we have a journaling system. So I've created a journal for myself where I put each and every transaction which goes on my satellite position as well as core portfolio position. Again, a lot of people think that maintaining a journal is too difficult and too tedious task. It's actually not. So if you are following things with discipline on a satellite position, maybe in a one week you will take 1 or 2 positions, or maybe 3 positions. It will be just 3 row updating with 4 to 5 data points. It will take hardly 5 minutes in a week. And core portfolio don't touch, because you are using a monthly chart, and once in a month only you need to take a decision. Okay, so it's like very, very simple but powerful position, because you can analyze where you went right and where you went wrong. Okay, so that is how the entire review process works, so that you can monitor and track your portfolio, and you can protect your hard-earned money, and at the same time get a good reward out of it. Finally, it is very important to keep upgrading for yourself. That is where I keep learning continuously from my community members. I learn from a lot of books. I learn from a lot of other investors. I network with them. And that is where, I am also like a lifelong learner. Although I'm teaching you, it is also my way of learning, because when I teach, I learn even better. and I can also retain my information in a much better way. So that is also a process of learning when I'm sharing with others. And that is where, the last point which I mentioned is learn. First I learn it, then I implement it, because if you don't implement it, then learning is of no use. And then you share it with others, and that is where you can 10x your retention of whatever you have learned, and you can even implement better, because you will get a lot of questions and things which you might not have thought about that entire implementation, which you get from others when you share it with others. Okay, so that is how you continuously upgrade your knowledge, and finally be productive, right? So it is one of the most important trait in our investing journey, because if we are not productive, and we always struggle. And that is where, I use a lot of tools, and if you want to learn how I use some of these tools, go to this video, top 5 stock market analysis tools, Vivek Mashrani. If you just type it, you'll be able to find a lot of these powerful tools, how I use it and how that can save your time. Another thing which I do is I work in the spurt of 2 hours in a day, like 2 hours continuously. I work 3 such spurts. So 6 hours of focused work will give you like your 80% of the results which you are getting. Okay, if this was bulb on, just type bulb on in the comment box, right? Just try this out. 1.5 hour to 2 hour with a super focus, taking only one task. Even you can switch off your mobile, put it in a silent mode, keep it in a different room. Don't even keep it with you. And then do 3 such spurts in a day. I can assure you that you will become much more productive than you are. And then, working almost like 4 hours work week. That is the dream. Again, I work pretty much 5 days a week these days. But then the aim is to ultimately shrink it to 4 days work week. Like 6 hours, full focus every single day. 24 hours in a week. And that is the freedom, because then you can focus on things what matters, and you can read a lot of things. You can keep compounding your knowledge, and ultimately you can enjoy the financial freedom which you have achieved, right? And apart from that, there are a lot of other areas in life which you need to compound. So compound your health, spend time on working out, exercise, and your health. Spend time on your mental well-being, read good stuff, interact with like-minded people, learn from people who really matter, because you are average of 5 people you surround with. And ultimately, give back to society whatever way and form you can do, and help others in the best possible way. So that is how, the entire journey of Ride to Rich, coming out of your rat race and ultimately enjoying your financial freedom. Okay. So hope you enjoyed this entire video. If you want to stay connected, and if you are not yet part of my community, you can learn all these things and watch my orientation program. Join this link, technofunda.co/webinar, and I would like to welcome you inside my community. And we are a community of more than 10,000 people, one of the largest investing community in India. And I would love to have you inside so that we can collaborate and learn together. Thank you so much, and God bless. If you have any questions, please let me know. More than happy to answer, and then we can wrap it up. Yeah, by the way, if you have not checked out my book, which is also on the same subject of compounding, just go and grab it on Amazon. It has been #1 bestseller there. You can just search with "You Can Compound" Vivek Mashrani, and you should be able to find my book. Awesome. So let me know if you have any questions before we close this session for today, and hope this was a valuable eye-opener session, because what I've done in this session is like laid out an entire framework of a step-by-step process, right from thinking about your end investing returns outcome and achieving your financial freedom, then starting from the selection process, then how to allocate inside your portfolio, how to review it, and how to update your knowledge continuous basis, and then of course going beyond the money part of the things. Yeah. So hope this was useful. I think there are no further questions. So I'll think that it is most powerful for all of you, and you have understood a lot of powerful things there. Okay, sir, where to keep funds when you find right opportunities? Okay, so what I do particularly is majorly I keep the funds in my savings bank account or current account which I have for my satellite position, right? So I allocate 30% in the satellite position. If I don't find any place to put in, then I just keep it hard cash because I want to use it very fast. But if you want to learn about how you can deploy your emergency fund and what are the different ways to keep a buffer for yourself and everything, you can just go through this video. Okay, so 10 powerful personal finance principles, that is where I've gone deep dive. But for right opportunity, if I'm just sitting on cash, it is either liquid funds or a hard cash into my savings or current account. That is how I keep it. Yeah. How to become part of my community. So if you want to become a part of my community, it's a screening process. Okay, I don't entertain direct joining, but if you want to still join, you can go to this link, technofunda.co/join, and this is where you can join my community. Thangamani says, is there any new stock to invest? Right now, I am not focused on the stocks actually. As soon as there is some important sector or tailwind which is coming, I'll let you know. But right now, the sectors which I am tracking is defense. I am tracking railways on my satellite side of portfolio. And I'm also tracking metals. Okay, these are the 3 top, and PSU banks, of course. Okay, so these are the top 3 to 4 sectors which I'm tracking right now. So hope this was useful. Thank you so much for asking that question. Okay, Joginder is saying like, what is your view on Sumitomo Chemicals? I think it's a very decent compounding company, and I've done a detailed video on agrochemical sector. Okay, so if you want to know more about Sumitomo and what are the triggers and how the company has been compounding, what are the products that is coming up, how it is a parentage support, and why it has created wealth for so many years, you can go and check it out. This video in a detailed way I've covered Sumitomo Chemicals. Just type agrochemical sector Vivek Mashrani and you will be able to find that. Yeah, superb. Thank you so much for asking that question, Joginder. Hope it was useful. Gaurav Srivastava is saying, sir, Shaktiman pe video banaya. So there is already a video on Shaktiman, just that it is only for my paid members inside my community. So that video access is restricted to members only, because otherwise it's no point if you watch the video but you don't have access to that indicator. So I give that only to selected members inside my community. Awesome. So I think we've answered most of the questions. Again, thank you so much for being till the end. Hope you liked the video. If you're not yet liked or subscribed this channel, please do so. Hit the like button so that I know you are enjoying this content. And if you have anything else which you want to learn and you are getting stuck, and if it is also part of my process, I'll be happy to share it with all of you. So write in the comment box if you have any such need, if you want to learn more on any particular topic which you are not understanding, then please let me know. And I'm Vivek Mashrani again, signing off. If you are not following me on Twitter, just go to my Twitter handle and hit follow there so that you can follow me on my Twitter as well. Okay, so thank you so much guys for being patient and staying till the end. God bless, and I will see you in the next yet another powerful video inside this channel. Thank you so much. Take care.